Experience the future of packaging and processing up close and in action. Explore groundbreaking innovations, engage with hands-on solutions, and connect with the experts transforming the industry. See how these advancements can revolutionize your products, production lines, and business. It all starts here. Don't miss out. Register today at packexpolasvegas.com/unpackedpod. You're listening to Unpacked with PMMI, where we share the latest packaging and processing industry insights, research, and innovations to help you advance your business. Hi, and welcome to another episode of Unpacked with PMMI. I'm your host, Sean Riley. The Mexican packaging market set records for imports in 2022 with a whopping 25% growth from 2021 to 2022. And where does Mexico look for the overwhelming majority of its packaging machinery capital investments? That's right, the good old US of A. I sat down with Luis Domenech, Managing Director at Market Intelligence Latin America, for a two-part podcast on what he saw in 2022 and the first half of 2023, as well as what he projects for the future of packaging machinery investments in Mexico. Part 1 deals with his research explaining 2022's tremendous growth and the impact inflation may or may not be having on sustained growth in 2023. Let's have a listen. So with all the fancy introductions out of the way, welcome to the podcast, Luis.
Thank you very much, Sean.
So the Mexican packaging machinery market blew all records last year. It beat them all with it unbelievable. It almost seems like it's a fake number, with an estimated growth of 25% in a single year, which, from what I understand, is the highest recorded packaging machinery imports, record in production of packaged goods, just smashed every record that was out there. I guess to start off, what do you attribute such tremendous growth?
Yeah, 2022, an impressive year for the packaging machinery market in Mexico. There were several factors that contributed to the explosive growth of packaging machinery demand. As you mentioned, all the records or the previous records were beaten, so we achieved the highest volume of packaging machinery imports in a single year. It was a 25% growth from 2021 to 2022. Also, the highest packaging machinery imports. Several countries, including Italy, China, Canada, and many others, they reached their highest historical shipments to Mexico. And there were several reasons driving this impressive growth. One was there was pent-up demand for packaging machinery from the pandemic. Several companies, when the pandemic began and we have the different waves of contagion, they placed purchasing on hold. But very soon, demand caught up with their production. So they saw the need to invest. Since there were too many companies that placed their investments on hold, when they realized they needed to modernize or invest in new lines, the packaging machinery suppliers were already booked and had long back orders, so they began promising, we can deliver your packaging machinery in 18 to 24 months.
Yikes.
So many companies said, no, we need it before that, and they began looking for alternative suppliers. That's one of the reasons why we see a tremendous growth in other countries. Typically, the packaging machinery imports in Mexico are supplied by Germany, Italy, and the United States. They continue to be the dominant players, but last year the growth of other countries was also quite impressive. Not only in the packaging machinery market we beat records, but we had the highest historical record in agri-food exports. The exports reached more than 50 billion. That was 12% more than the year before. And several of the agri-food exports produced in Mexico, the produce goes inside of a package. And we also beat the record of agri-food imports, which also has a strong impact in packaging machinery because most of our agri-food imports are grains and are bulk products that we import and we pack in Mexico. A good example is, for example, pork meat. We import pork legs and half carcasses, which are cut, processed, and packed in Mexico. So this record in pork meat imports also has a positive impact in packaging machinery demand.
Interesting. You mentioned demand, but are there other main drivers for CPG companies that would cause them to invest in new packaging machinery?
Yes, besides pent-up demand, the CPG companies are seeing significant growth in demand for their products. There are two factors that have a very strong impact in the product demand. One is remittances that we are receiving mostly from the United States, but the remittances also hit a high record last year. We received $58.5 billion in remittances.
Wow.
Which is way higher than the 51 posted in 2021, which was also way higher than the 40 billion received in 2020. So in just 2 years, remittances passed to 58 billion from 40.6 billion. Remittances are mostly money sent by workers working overseas to their families in Mexico, and large part of that money that they receive is spent for covering their basic needs, including food and beverage. In addition to the remittances, the Mexican government launched social programs that provide cash to the most vulnerable groups of the economy. So the elderly people, the handicapped, but also they provide funds to young unemployed people that many of that money is spent in packaged goods, in foods, in beverages. Mm-hmm. For the young people, they say a lot of that money is spent in alcohol and things like that, but all that is having an impact in packaged products demand. This money that is being distributed by the government for social programs, it adds another $32.8 billion to the economy. So you have 58 billion from remittances, 32 billion from the economy. That's a huge amount of cash that is being injected to the Mexican economy, and a large percentage of that is going for packaged products demand. So companies have seen their production insufficient to cover demand. And I would add another factor, that is the increase in the minimum wage. The current administration, they have been increasing minimum wages in Mexico in double digits for the past 3 years. So if you compare the minimum wage from 2019 to 2023, it has almost doubled, measured in US dollars. That has also impacted the demand for packaged goods. People making minimum wage in Mexico, they could not afford to purchase sodas or even think of tequila or things like that.
Right.
The minimum wage in 2019 was equivalent to $5.1 per day, and that has been increased to more than $10 per day, so it's more than double.
Yeah.
So with that increase in minimum wages, instead of only buying bulk produce and basic products like beans and rice and things like that, now they can afford some proteins, now they can afford some packaged foods. So that has also had an impact in packaging machinery demand.
Very interesting. So I want to expand on that a little bit with the impact of the economic situation that's going on in Mexico, kind of how that impacts packaging machinery. As you've touched on with the higher minimum wage, we've also seen moderate growth rates, but increasing inflation, increasing interest rates. But the currency is still very strong, which I guess it's appreciated more than, if I'm not mistaken, than most other currency in recent years. So does a strong currency, does that help or hurt CPG exports?
The strong currency should have a negative impact in CPG exports.
Okay.
However, the trade figures show that has not happened. We were talking about year of records in 2022. Other records that we posted were the highest exports of beer, our highest exports of preserved foods, dairy, bakery products. So in theory, when the peso is strong, our exports should begin to go down, and that has not been the case. In some part is because of the trade war between the US and China and the nearshoring efforts that many American companies are looking to diversify their imports from Asia, and they are looking at Mexico not only for investment but also for sourcing products. So that has had a very strong impact in our trade balance. But specifically for packaging machinery, the strength of the peso has been beneficial because most of the machinery, more than 85% of the machinery that we use in Mexico is imported. And when traditionally we have seen the Mexican peso lose value against international currencies, the strength of the peso, and now that we have seen the peso going from 21 pesos per dollar to 17 pesos per dollar, that makes imported machinery significantly less expensive. A large number of companies see this appreciation of the peso as something that is a window of opportunity. They don't see it as something that will prevail over time or will be permanent. They see it that right now, because of the different factors of the remittances increasing, of our exports not being affected by the currency, they see that right now there's a window of opportunity to purchase imported goods at very convenient exchange rate. And that also fueled packaging machinery demand and is definitely fueling packaging machinery demand in 2023.
That makes complete sense. So you noted the increase in the minimum wage, and you also just touched a ton on the economics. Do you think then that the retail sales, because I know in the past 2 years they've kind of produced double-digit growth, which kind of tracks with, inflation and with making more money, but how much of that do you think is due to inflation and how much of it is actual growth?
Well, the inflation has been one of the key inhibitors for further economic growth.
Okay.
In Mexico, and I think in the US market too. Inflation has been right now the stone inside of the shoe that is bothering us, right?
Right.
Inflation in Mexico last year was almost 8% when interest rates reached 11%. Now, in the food and beverage sector, the inflation was the highest, one of the highest among all sectors. So we can say that the inflation in the retail sector was almost double digit. If the general inflation was 8%, the inflation in food and beverage was 11, in beverages was 9, in pharmaceuticals was very close to 10. So despite retailers posted double-digit growth rates, the growth was only 3 to 4% if we discount inflation. Now that 3 to 4% has been in additional product demand, which to have a 4% real growth in retail in 1 year is a very positive figure. Many of that growth comes from the different factors that we discussed: more remittances, more money injected to the economy from the social programs, the minimum wage increase. That's making the people that could not afford to go to a grocery store to purchase groceries, and they were going to street markets or wholesale markets to purchase their foods. Now they can access the retail segment to purchase at least basic products. And that has been a strong driver to CPG production in the last years, and we believe it will continue over the following years. The forecasts in revenue change for retailers for 2023, where at the beginning of the year they were pointing at 5 to 7% growth, and as the year has progressed and the economy remains strong, and we're posting the highest growth rates that we've had under this administration, seems that those figures will be way higher. And we're expecting 2023 to post once again double-digit growth. And we have seen the Mexican inflation to begin cooling down, which is very positive news for the economy.
Yeah, that is good news indeed. And we're going to pause there to wrap up part 1 of our podcast. Stay tuned for part 2 with Luis, where we dive into the impact of the upcoming Mexican presidential elections on packaging imports, as well as a look at what Luis projects for 2024. Please rate, review, and subscribe. To do that, go to the iTunes podcast or Spotify app on your phone and search for Unpacked with PMMI.